Lisa Wiles with Fairway LTW Group.
Take 10. It's Corey Freels with the same.
And we're bringing it back.
Here we go.
Here we go. As always, let's go ahead and talk market first.
Let's do it. I'm going to have to try and be expeditious, which is not one of my strong suits. So Monday, we had the inauguration, and we had a slew of executive orders come out, which now this week, the housing industry has been trying to digest. What do these mean? So quickly, the three that I think most impact housing.
Because honestly, who's really listening to this stuff? Like, you have to understand, how does it apply to me?
That's right.
That's what we're going to do real quick right here.
That's right.
How does this apply to your business?
That's right. So the three things that the executive orders that impact housing, one is basically an affordability act. So they want to make things more affordable, including housing. And they've actually have started to focus on the supply side, which is encouraging, because I don't know that we've had any interest in DC in the supply side in a long time, and that is a bipartisan effort. So that's not going to be just one administration. I feel good about that.
And by supply side, you mean let's build a lot more houses.
That's right.
So we have not as much pent up demand, which
That's right.
should bring down the prices of the home and make them
more
more
housing.
affordable.
Even talked about zoning regulations locally, which we all, if you listen to Hanson Sale over the years, he talks about that a lot. So that's one area, and that was a positive for housing. We all know that the Trump administration.
One quick thing. I love it when the government says we're just going to build a lot of houses. So are they going to do a government subsidy program? How are they going to motivate people to build more houses? How do they even solve that?
I think you'll see tax incentives for builders.
All right. That's cool.
I think you'll see tax incentives for builders. One thing I would love to see is, and this was another realtor floated this idea a few years ago, back when it was really hard for first-time home buyers to get a deal.
Sure.
If you're a flipper, give you a reduced or waive capital gains if you sell to a first-time home buyer.
That's a great idea.
I think it's a great idea.
Yep.
So
now we have a bunch of little builders out there.
That's right.
That's
right.
the concept of Uber, right?
That's exactly right.
I love that. Okay.
So the second thing is, we all know that the Trump administration ran on and is really passionate about immigration reform.
Passionate.
A lot of our labor supply in construction are immigrants, and unfortunately, a good portion of those may be undocumented.
Yeah.
And so that could present a challenge if we have some sort of large-scale deportation. I think the odds of that are – I don't want to debate the odds of that. You hear different opinions about this. Logan Motoshami with Housing Wire says probably doesn't have a ton of effect. Mike with Altos Research says it could have some effects. So we'll see if it even happens, right? So the third thing, and I'll summarize.
So, sorry, back to the second thing.
Yep.
Again, how this would apply is if there's a total shakedown of all undocumented people in the United States and they get sent away, how are the builders going to backfill? And are we going to have tons of unfinished homes sitting out there that maybe push even a builder into foreclosure? I mean, what are we talking about?
If supply is there, if demand is there, builders will find a way.
Somebody will
find a way, right?
Okay.
But demand has to be there. So interest rates are by far the most important thing for demand. And so anyway, I have ideas about that, but that's probably another
Number
conversation.
3. Sorry.
The third executive order that affects housing is around, I'm blanking. I had it. I was ready to roll into it.
Oh, I'm sorry. I missed you up.
So we talked about immigration. We talked about
supply.
And then we talked about tariffs.
Oh,
okay.
yeah.
So we've heard a lot of talk about tariffs. And okay, so this is where I put the part in. How many of you as a parent have threatened something you actually didn't intend to do to your children to change their behavior?
Yes.
Or at least want to do. You're like, I would. I really don't want to.
We will leave our friend's house right now if you don't shape up. And it's my friends too.
Yeah, I don't want to
I don't want to leave.
I don't want to leave, right?
Why are you being a jerk?
So I think that you've seen this already demonstrated in Canada, where we talked about a 25% tariff to Canada, and all of a sudden Justin Trudeau resigns. And I'm not sure that that's correlated, but that was very quickly thereafter. I think that most of the tariff talk is actually a threat to put together a more fair trade deal. However, if it's not, and it could not be, if you have a 25% tariff on China, I mean, half the stuff that goes into our houses come from China. right?
Oh,
You
those
talk about
quick
appliances.
cookie cutter type houses.
I mean,
the cheaper, the better deal
That's right.
because they get supplies at that low price.
That's right. And so that's going to push prices up. That would be a negative for housing. So we'll see how it all shakes out. Again, there's what you say and what you're actually willing to do. And a lot of times your threats are, speak softly and carry a big stick kind of thing. So we'll see how it all shakes out. Interest rates are by far the most important thing, though. And that one thing that the Trump administration has talked about is taking Fannie Mae and Freddie Mac out of conservatorship. So the government right now, Fannie Mae and Freddie Mac purchase almost every loan in the country right now, most loans in the country right now, and they are under government conservatorship. There's opinions that taking them out would raise rates. There's opinions that taking them out would lower rates. But Trump being a real estate guy and a proponent for lower interest rates,
that's good, right?
Yeah, I think that could be a positive. So we'll see how it all shakes out. But welcome some questions. I spoke about this for like 25 minutes and didn't stop yesterday. So I had to make that into 5.5.
I think actually you hit on it really well. Yeah,
Okay.
I think that's good.
Okay.
And I think also just since we're already talking rates, just to mention, they've kind of stabilized for a little bit. And when is the next big report coming out? In February?
End of February,
Yeah.
I think, is when we're going to see the next, maybe middle of February is when we'll see the next big improvement.
Okay.
Chance for improvement. And I'm hopeful. I think it'll happen.
Otherwise, it's been kind of like same thing, same day, same thing.
That's right.
So now, like what Take 10 is all about is how do we get you one more deal?
One more deal.
One more deal. And I'll tell you one that I kind of love this little trick. It was kind of cool. Had a person reach out to us as an investor, and he said, I want to buy this house. And, we always ask the question behind the question as an investment. And I'm like, okay, well, tell me a little bit about what you're looking to do and how that plays out. And he's like, well, ultimately, my mom is going to move into it. So we have childcare closer to us, et cetera. And then once, she rolls out, then we'll have an investment property that we can rent out that's closer to us, which is great, right? And I said, okay, break, boop, boop. Your mom's going to move in? And he's like, yeah. And I was like, well, why aren't we putting her on the loan? She doesn't have any income. Well, I don't care. I don't care if she has income. So now instead of an investment loan with a 0.5% higher interest rate, we have an owner-occupied loan. Mom is the owner-occupant. We're not looking at her income at all, just that she has a credit score. And then the son and wife are the non-occupant co-borrowers, giving the strength for the credit and all that. Also, they were like, we have 20% to put down, but also we want to renovate. And on an investment loan, you probably want 20% down. Owner occupied, what, 3?
Yeah.
What do you want to do?
5?
3, 5?
What do you
How
want?
much money you need for renovations? Like keep that cash in your pocket and put a little bit less down.
That's right.
So there are people out there that think that they want investment properties, but if it's for a family member, that's primary occ, and the barrier to entry may be where they think their down payment needs to be.
That's right.
And maybe it doesn't need to be that much.
Yep.
So there's crafty ways around things to
right.
make that one more deal count.
Yeah, bring it. And there's a couple of ways to do that. You can do that without mom being on the deal, potentially. If she has a disability or she's not able to pay, right?
That's right.
Or a child who has a disability.
Caretaker.
Yep. So I've done a condo downtown before for a child. Dad was the primary borrower, only borrower, and it was for a child who had a disability and wasn't able to pay the mortgage on her own. So yeah, bring it to us. We'll see if we can figure it out.
Yeah, there's ways. There's ways.
The other thing, and I got this question yesterday.
Oh, fun.
They're like, do you think we'll see rates in the 5s by the spring? And I don't. But and I kind of felt bad. I left and it was like, they were like, well, that was kind of discouraging. And I'm like, listen, we took this position at the beginning of last year. Our branch took this position. Rates are never going down. That's the position we took at the beginning of last year. And we were up 37% on the year.
And we don't have heartbreak either.
We don't have heartbreak. And it's because we were like, okay, what if rates never come down? How would we do business? And the way that you do that is your clients can get the rates right now via a seller paid buy down.
Temporary buy downs.
Temporary,
We
permanent,
quoted one.
whatever.
We quoted a 3-2-1 buy down yesterday, and the starting rate for the first 12 payments was 3.99.
There you go.
Let's freaking go.
I quoted a permanent 20-year fixed at $599, paid by the seller on Monday.
You want it? Go get it.
We can do it. It's just all in how you negotiate the deal.
Correct.
We
All
work
right.
weekends.
We do.
After hours at the ltwgroup.com. We are at 10 minutes and 5 seconds. Thank you for your time. We'll see you next week.
Bye.